Hello, my name's Rachel and welcome back to the channel. So today I've got a really quick video for you on the Urban Logistics REIT or Real Estate Investment Trust. Now the code for that is actually SHED or SHED. So I added this to my investment portfolio a few months ago. I wanted to add a little bit of diversity to my portfolio and have some real estate investments in there, simply because the only real estate investment that I currently have is the house that I live in with a hefty mortgage on it. And other than that, I thought this was a really good way for me personally to get into investing in real estate without having to go down potentially the buy-to-let route. So I wanted to add some real estate investment trusts into my portfolio. Now they absolutely aren't the right choice for everyone, so please always go away and do your own research before investing in something like a real estate investment trust, or for that matter before making any investments at all. You want to check that they're right for you, that the risk level is right for you, and that you have backup money if you need it, so you don't have to sell those investments potentially in a dip. Now the reason that I wanted to talk to you about this REIT today is that it is featured as a buy in this week's Investors Chronicle. So I wanted to give you a little bit of information on the article about the Urban Logistics REIT. But first of all, I'm just going to give you a quick overview on this real estate investment trust. I found this article to be really good because it does explain some of the drawbacks with investing in REITs at the moment. But let me just give you the kind of top line figures for this real estate investment trust, but please do your own research. I'm not an expert by any means. So 3-year annualized returns for this real estate investment trust are 12.94%, 5-year annualized returns at 11.71%. So the ongoing charge for this real estate investment trust is pretty hefty. So you've got an ongoing charge and you've got a performance fee, which is estimated to bring the ongoing charge to 1.58%. So again, a pretty heavy fee when you compare that to investing in, for an example, an ETF where you might have a fee of 0.07%. So quite high fees, so that's certainly worth considering. So I've taken this information from the Urban Logistics REIT website. So it says the company focuses on a specialist subsector of the UK real estate market, investing in mid-sized urban logistics buildings up to 200,000 square feet. Our tenants distribute essential goods, the last mile of the supply chain, to homes and businesses. This is an indispensable part of the supply chain, and demand for such property vastly exceeds supply. So that's a little bit about this specific REIT. Now let's get on to the article and some key things that are mentioned in this Investors Chronicle article, which is listing it as a buy despite certain factors. So the article says, if and when the warehouse bubble does burst, those who exercised a semblance of caution during the boom times will be rewarded. Urban Logistics REIT, or SHED, is well aware of this, which is why Property Director Christopher Turner stresses during a call about the warehouse developer's full year results that it does not have any fashion tenants in its portfolio, and that Amazon makes up just 2.5% of its rent roll. There is a lot of sense to this thinking following Amazon's profit warning and its admission that it had overexpanded in May. Many have worried that the cost of living crisis and the subsequent fall in discretionary spending will in turn create a fall in demand for logistics space to service e-commerce. So that is one of the big concerns. However, this fall is yet to happen, with Savills calculating that the amount of warehouse space being taken on new leases is 36% above the long-term average this quarter, and the national warehouse vacancy rate is at a near record low of 3.1%. But if discretionary spending does continue to drop, Turner believes fashion retailers will be the first to feel the pinch. These results indicate this prudence with regards to tenant selection has not been at the expense of growth. Pre-tax profits have risen rapidly since 2020, surging fivefold in 2021, then tripling in 2022. However, with industrial land values and warehouse prices rocketing as industrial investment investments yields plummet to an all-time low of 3.25%, it's hard to see how urban logistics can keep up with its current trajectory. Still, even if urban logistics is unable to scale its profits at the same pace going forward, the company's discount to net asset value seems overdone, considering the strength of this year's figures and its low debt. Turner insists there is still money to be made in corners of the sector if you roll up your sleeves. A sensible attitude in a late stage market where sense is sorely needed. Buy. So that is what Investors Chronicle is saying about the Urban Logistics Real Estate Investment Trust, or Reit. As I said, I'm actually already invested in this real estate investment trust in my investment ISA. I added a few warehouse REITs to my portfolio. They make up a very, very small percentage of my portfolio just because they were a new investment for me and I'm just kind of testing the water with them. As I said, I'm already invested in this real estate investment trust. I will continue to hold it. But please, if you're interested in this specific real estate investment trust or any real estate investment trust, go away and do your own research on them before investing. I hope you found this video interesting. Any questions, please do pop them in the comments down below and I will try to get back to you if I can. As I said, I am not an expert, so please just take everything I say with a pinch of salt, really. But thanks so much for taking the time to watch and have a really lovely day. Bye bye.